What is going on, everyone? And welcome back to Explain the Charts, your go-to channel for in-depth technical analysis. Today is October 22nd, 2025, and we are taking a close look at Ethereum, or ETHUSD. There is a fascinating tug-of-war happening right now between extremely bullish fundamental news and some worrying short-term price action. In this video, we'll dissect the latest headlines, correlate them with the chart data, and map out the key levels and potential scenarios to watch for. Let's get right into it, starting with the latest news driving the market. The news paints a very mixed, but broadly optimistic long-term picture for Ethereum. On the bullish side, we have significant macroeconomic tailwinds, with reports of a potential end to the government shutdown and expectations that the Federal Reserve will deliver more interest rate cuts before the year is over. These factors tend to be very positive for risk assets like crypto. Even more compelling is the surge in institutional interest. We're seeing reports of major players like Bitmine and BitDigital accumulating hundreds of millions and even billions of dollars worth of ETH. Firms are not just buying, but also staking their holdings, showing strong long-term conviction. An Alibaba-backed fintech giant is also quietly entering Ethereum's Layer 2 ecosystem, signaling massive potential for real-world asset tokenization. However, it's not all clear skies. Recent headlines also highlight that ETH has slipped below the crucial $4,000 mark. Some analysts point to a bearish MACD crossover on the larger timeframes, which has preceded major drops in the past. There are also concerns about weak spot buying and traders taking profit, leading to predictions of a possible drop toward $3,100 if current support levels fail. Now, let's see how this news translates to the daily chart, looking at the bigger picture. It has been an incredibly volatile 18 months for Ethereum. After a choppy period in late 2024, we saw a major bottom form around $1,400 back in April of this year. From that low, ETH went on an absolutely parabolic run, surging over 240% to a peak just shy of $4,900 on August 22nd. This level near $4,900 now stands as the key multi-month resistance that bulls will eventually need to overcome. Since that peak, the price has been in a corrective phase, putting in a significant bottom on October 10th around the $3,500 mark. This $3,500 level is now our most critical long-term support zone to watch. Following that low, we saw a sharp 20% rebound, which aligns perfectly with news reports of whale wallets accumulating over 80,000 ETH during that dip. The price rallied to nearly $4,300 before facing selling pressure, and as of yesterday's close, we are trading around $3,876. This area between $3,500 support and the recent highs around $4,300 has become our primary trading range. The price is currently caught between the bulls who bought the dip and the bears who are defending the $4,000 plus levels. Let's zoom in on the price action since this summer's rally to get a better look at the current structure. As mentioned in the Yahoo Finance article, what we're potentially seeing here is a classic bullish cup and handle pattern. The cup is this rounded bottom formation starting from the August peak near $4,900, dipping to the $3,500 low and rising back towards the recent highs around $4,300. The handle is the current consolidation phase we're in, which represents a slight pullback before a potential continuation upward. For this pattern to remain valid, we need to see the price hold support during this handle formation, ideally staying above the $3,700 to $3,800 zone. A clean breakout above the handle's resistance, which we can place around $4,300 to $4,400, would confirm the pattern. This would give a measured move target that could take us back to the all-time highs and beyond. However, a break below the low of the handle would invalidate this bullish setup and signal further downside. To understand the very latest price action, let's switch over to the 15-minute chart. This gives us a granular view of what has been happening over the past several days. We can see a strong push upwards on October 19th and 20th, where the price climbed from around $3,820. The rally continued until it peaked just above $4,110 during yesterday's session on October 21st. This is where the selling pressure, mentioned in the news, really kicked in. We saw a very sharp and aggressive rejection from that high, with the price tumbling all the way down to a low near $3,838 in a matter of hours. This confirms that the $4,000 to $4,100 area is a formidable short-term resistance zone. Since that drop, the price has been attempting to stabilize, finding some footing in this $3,840 to $3,880 range. The immediate battle is clear. Bulls need to defend this $3,840 level to prevent another leg down. On the flip side, bears will be defending any retest of the $4,000 psychological level. Switching back to the daily chart, we can put all the pieces together. The bullish macro environment and incredible institutional demand are providing a strong fundamental floor under the price, explaining the aggressive buying we saw at the $3,500 lows. This provides a strong case for being long-term bullish on Ethereum. However, the short-term technicals and order flows are telling a different story. The recent rejection from above $4,000, visible on the 15-minute chart, shows that there are significant sellers taking profits at these levels. This weakness is what fuels the bearish case for a drop to $3,500 or even $3,100 if key supports fail. The entire price structure now hinges on the resolution of this potential cup and handle pattern. Its success or failure will likely dictate the direction of the next major move. So, to recap, let's lay out the key price levels and our unbiased predictions. Major resistance sits at the recent peak of around $4,390, and above that, the all-time high near $4,900. Immediate, short-term resistance is the psychological $4,000 level and the recent high of $4,115. On the downside, immediate support can be found at the recent low of $3,840. Below that, the most critical support zone is the October low around $3,500. If $3,500 were to break, the next major target for bears would be $3,100. Now for the scenarios. The bullish case, which I'd give a 60% probability, is that the handle of our pattern holds above the $3,700 to $3,800 area. Price would then need to break decisively above $4,115 to signal a move towards the cup's resistance at $4,390. A breakout there would target $4,550 and $4,750. This scenario would be reinforced by continued positive macro news or a spike in buying volume. The bearish case, with a 40% probability, involves a failure of the handle support. A break and daily close below $3,800 would be the first warning sign, with a close below $3,700 likely invalidating the pattern. This would open the door for a retest of the $3,500 low, and this scenario would gain likelihood if we see negative market news or a rejection from a retest of $4,000. Things to watch for in the coming days are the Federal Reserve's commentary on interest rates and any new announcements regarding institutional ETH adoption. That's all for today's analysis on Ethereum. Please remember, this video is for informational purposes only and should not be considered financial advice. The cryptocurrency markets are extremely volatile, so always do your own research and make decisions based on your own risk tolerance.